Okay, good morning traders, and welcome to the Pro Trader webinar series. Well, it's not the series this week. Joseph has a special event. You guys know who Joseph is. He's on every Wednesday here in Joseph has a special event, and at 10 a.m. East Coast time. And he's going through stock analysis and mostly well, small caps and large caps. But he is excellent at both, but specializing in the small caps trading with very specific targeted strategies that he goes through everything, the trade management, the exits, the entries, and the setups, what he's looking for on the bigger time frame, and then how to read it in Bookmap. I have Joseph's information here, his website, and other links. I will be putting this into the chat. If you want to reach out to him, he does offer educational services and mentorship as well. So you can contact him directly. Let me go through the disclosures and then turn it right over to Joseph. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, Joseph, so if you want to, you've got your screen being shared. Let me project it here. Hold on. Got it. You're all set to go, Joseph. Take it away.
So good morning, everybody. Good morning, Bruce and Bookmap. It's always a pleasure to be here. Today we have 2 o'clock FOMC. So every morning, the first thing that I do is looking at the news data that we have on the day and also for the week. We're coming from the 4th of July, so I hope you had a good holiday yesterday. This morning, my main focus was Tesla, Meta, AMZN. So I'm always looking at the 3 main stocks. At the same time, I will be looking Nvidia and then also at the major indexes. Futures of reference, actually always they are for me NQES. I'll also be looking at SPY, of course, and at Qs, but those are the way to go. For small caps this morning, we had IMPL. So we're talking about a very small market cap company. Fader on day one by a forecast, 84%. And also we had instead CCCC. So this is another small cap. But the small cap has not a high forecast fader on day one. Actually, this company has a high institutional ownership. So when we have a high institutional, I'm always a little bit more conservative in trading it short. So I will start with Tesla today, and we can proceed with an analysis. So this is my first chart that I look every single morning. Even if I do the analysis on the weekends, every day I look at the monthly chart, and I need to look at the trend. So this is the trend of Tesla in the last 15 years over here since 2008. The last year has been a bullish year, and we had several, Tesla over here. We had several over here months bullish in the starting of the year. So we had January was a bullish month. February was a bullish month. And then over here we had March, which was a bearish month, and then reclaim. April was the last bearish month, and then we had, for now, 3 bullish months. Look at this price action. So I will point out over here a few things. The first one is a relative low. Then we have a relative high, higher low, and now we're forming, of course, a higher high. If we're going to connect all these levels, we see that we form a higher low and a higher high. So market is bullish on Tesla. Also, market is bullish on ES and NQ. We're trading a bullish market. Is since a couple of weeks, I think a little bit more, but 3 weeks that I'm holding a swing long, based really on a simple strategy and J lines. Major break over here of the 215, 220 area. And my first target is going to be 300. And I'm going to explain why 300. The next target, I'm looking for these highs over here into the 420s. Of course, I need, and actually we need for all the swing traders and bullish traders that yes goes to the 4800. And NQ over here needs to go to the 16800. Okay, so you can see NQ bullish. Yes, bullish. They all broke this consolidation. And then we're looking at Tesla, Meta, Amazon. So we're trading a bullish market. Now, we're not talking about 2020, 2021, but it's a bullish market. We're going to start tracing our levels. And the first one over here is going to be on the monthly. So the reason why I've been looking for that 300 is essentially a confluence of two major key levels. The first one is set from a supply area. And we can see over here, this is a supply area that I'm interested in. What is a supply? If we distinguish the level based on volume in order flow, we're going to consider that level as a supply because we're rejected here, we're rejected here, and we're rejected here. If we consider instead that level only as a technical resistance, in that case, we will call it resistance. But actually, this is our supply area. So between 300 and 320. We don't have only a supply area, but also look, this beautiful trend line over here. Really seems like a picture perfect. Passing over here for the level of 290, 300. Okay, so that is the reason why when we started the long position, we were looking for this target, and we're still looking for this target. Shifting to the weekly chart, we can see this better. Now look at this chart. Okay, we have a major dip over here. Remember, this was number one, so we can plot over here number one, which is the main relative low, and at this point is still a descending trend, right? We don't have any clue over here. This will be the last dip. Then we're setting a lower high, so number two, exactly this point. But then we can set a higher low, number three, at this point. What I liked about this number three, and again, I was not sure over here this was going to bounce. I said, ideally, this is going to be a nice bounce because this is a perfect hammer. But I didn't take any long position over here unless intraday trades. And the reason why is because often we see these hammers like this one over here. In this case, work as well, but we will see hammers, but they can even not work, like we can get maybe a small push and then still unwind. It turned to be a very good hammer. So I like this pattern formation over here. This is a beautiful pattern formation. Also, we start reclaiming this level. You can see how many times we dipped over here. And we had our bull flag or ascending triangle over here breakout. This is the zone that we started to long. Okay, when we start seeing a 1, 2, 3 breakout over here, we had a perfect also higher time frame J-lines curl, and that is the target we're watching. That key area 300. Because look over here, traders, how many times we push the price into 300, start rejecting. Okay, so we could get 295, 300, 310, but this is the area. If ES and NQ will push, then I'm still more positive that we can get to the 400. All right. Now, this is my personal trading, is what I teach and explain. Don't follow, as Bruce always say, alerts like that, okay? Because behind the strategy, there's a lot of research. There is a very systematic process in order to get long and get these trends. Next step, I'm going to go to the daily chart. In the meantime, over here, we'll be discussing about setup that we had over here right now into the 281. This is our daily chart. So why use the daily? Well, it's the most common use for the higher frame analysis. I can also look over here even better at the price action formation. I'm looking at the key daily levels. And we have also over here, again, the monthly and the weekly supply area. So we can see better this 300. Let's zoom in. So let's zoom in the last week. And this is what has been doing over here. So hammer formation, remember what we were talking about before. After the hammer formation, gap up. And then over here we have this is a bar, it's a spinning top, okay? This could go 50-50. Then with a strong close, and over here, gap up. Now look now, we're forming, ideally, a pennant to our flag. So I will be looking for this kind of pattern, okay? So I'll be looking for a bullish candle over here, next target 290 and then 300. And we're going to go to the hourly chart. Okay. So now it's a little bit clearer why we were looking over here for the longs, and traders now will start to understand the reason why we started looking for longs into the dips. We started to look for longs into the dips and long again into the dips. And then over here again, longs into the dips. The plan of this morning was a bullish plan. If I can put up a second, I will try to explain a few seconds over here about the plan. So we have this consolidation the last 2 days, right? And this morning, we have a major wedge. And we had two major key levels of support. So demand over here, 274, and then another one over here, 276. So what this tells you, traders? What this tells you over here? Trend is bullish, long term, medium term, short term. So unless the market doesn't show you weakness, stay long. We got into the support. This was around 8 o'clock. We start pushing over here at 9 o'clock. Then was a big, strong move from ES and NQ. ES and NQ this morning. I'm taking up NQ. Look over here. And you can see again where it bounced from. Hourly J-lines. Picture perfect again, right? So you see the hourly J-lines over here bounce, break of this consolidation at, now it's breaking the 15,400. So we are in a bullish market scenario. Where's going to be the next target? This area over here. So this to go now into the analysis, we're going to analyze the order flow together on Tesla this morning. And we're going to see if how to trail for who's long in these positions. Anybody else traded this morning in Tesla? I will bring up also a few considerations I think is important over here to go behind the process, and I will show also what we saw in Bookmap. So let me bring up over here this. So first of all, the plan. So we can go check the plan that we made and why we're looking to Bookmap. So this was the plan. I think it's very simple over here to understand. So this morning, you can see the demand zone, right? Over here, this is what we explained. This we shared this at 6:48 New York time. So we had this demand zone at 274, and this other one over here, 264. So 264 didn't happen. We had a dip this morning, not at 274, but at 276, and then we're looking for this push to the long side. I want to share also the moment of the entry. So over here, you can see how was the entry and what we saw in Bookmap. Okay. So this is the entry over here this morning. So right into this dip, 278s, and then selling in partials over here. And also what we saw in Bookmap. Over here, you can see Alexandra explaining the dip. So we're going to put this just next to it. Okay, there we go. So in the moment that we open, we often see on Tesla dips. Now, these dips are often where, if we have a bullish environment, bullish market scenario, long-term trend bullish, medium-term trend bullish, short-term trend bullish, we see often dips that are bought. So this dip that we see here is exactly this over here, 278. And we see that makes that V pattern that me and Bruce always talk about. So nice V pattern here. And then push the upside. So this push is here. So nice 5 points move. And the reason why is we had an absorption over here. So we'll zoom in after explaining this. This is a perfect absorption. And if you look, traders, at videos of 2, 3, 4 years ago or more, this pattern is a pattern that we've been trading all these years. Okay. So remember, V pattern is essentially this. Of course, you can see the dip and then a bounce. I don't really like to long over here because longing over there will be longing around 280. Instead, if you can, with practice, try to long into these dips. We had a major support, 278, major support over here, 278, a perfect heat map. And look how perfect Bookmap gave you the timing. Okay, so you have to have the key level. Key level alone won't mean much for me. Just not because I see a level, I will long. As not only because I see a heat map, I will long. You have to have a strategy around, okay? The strategy over here is combining, so having the confluence of both over here. So support, the same time Bookmap confirming that over here we have buyers simply stacked, okay? Over here we have buyers stacked at the level, major absorption, and then we start seeing over here buyers. Look over here. I don't see a lot of sellers. Look at those dots, right? So over here, we have a very strong dip buy. We have a very strong tape. And we start making, like we were saying before, we start making 1, 2, 3, and 4. Same scenario that we are looking on the monthly chart, remember? So where we are forming a low, a higher low, and a higher high. That's the moment where we see this breakout, and that's the moment where we shift to bullish. Is it clear, traders? Make sense?
Joseph, I have a question on this. So your V bottom, so as you said, like, well, there's the support or there's the demand right at point number 1. And then a lot of times, like you said, like you kind of have a microcosm of what you look at, and you've covered this many times before. Basically, the pullback to 0.3 or the curl before 0.3. You look at for it in more of a kind of micro structure. you look for those buyers to come in and curl. It just, price starts to curl around, and then you see those buyers,
Hmm.
and then take it on up.
Yeah.
Yeah, you can really kind of focus in. You don't have to, or I just wanted to reiterate that point because you've said this many times in the past. Instead of just blindly, setting a limit buy down in those areas, or getting in, wait for buyers to tell you a bit, and then
Correct, because many times people or traders will anticipate, and we don't want that. Maybe
yes,
this is going to go all the way down, and you're going to get killed, by a massive sell-off, and you're going to try to buy. So what you said is exactly what we need to look for: that higher low, that confirmation that buyers are stepping in, because we will see many support, right? How we know that this is the one that is going to hold? We have to see a reaction. So when trader asks me, Jay, how you know that that's the main support? You have to wait for a reaction. When we are up here, let's say a number 0, I cannot say a number 0, okay, number 1 will definitely bounce. I'm going there 100% of my size. No, I don't know it. I know it's going to be a support. I know there's going to be a little bit of, let's say, war shift between supply and demand, but I don't know if bulls will take, control over here of the price action.
right,
What I know is that one, and I will say, Bruce, we can do this. We can put one, the first point, and we see a key level. So we know that that's a key level on a daily chart, intraday chart. So let's say higher time frame and lower time frame. And a second point, I will put over here the confirmation of Bookmap demand zone. So seeing, in this case, what? A heat map. Of course, the bigger, the darker, as you know, traders, the more important. And then we see also that dot. You see that red dot? That's a nice absorption. That's, for me, is a key. Really, it's a key point. But I want more, because I see the absorption, but I have to know now that longs are stepping in, right? So look at those dots that follow that dip over here. All those dots over here, all these dots. These dots are demand, right? So these are buyers stepping in. And they're just like rushing now. They just want to get in. They don't want to miss over here the trend, because they know that this will push up today. So we need over here green dots. Green, I have green. You can have blue, white, whatever. Essentially what is demand starting to get into a climax, okay? So they're starting to acquire over here. They're building positions, and they're getting long. And then 5, I would put the higher low, which for me, the number 3 is the confirmation when we start bouncing that now we don't have any more sellers in control. Because what could happen? Number 2 joins, and we start having over here now lower highs and lower lows, right? But once we form this number 3 and we start cracking over here the number 2 high, that is my confirmation that longs are in control. So that is the main point. All of this together, all of this is the process. All of this, traders, all of this is a process. Okay, so screenshot it, because this is the process to take a long like this. You buy the dip and you start selling over here for a multiple R return. And this, it doesn't really matter if it's like, a 2, 3, 4, 5, 6-figure trade. Size will come. So don't really look at the size that you trade. Look at the process, and look at the use of Bookmap together with simply key levels on the chart. This really is not a picture perfect. This is actually what we did also on Friday. Friday was sharing also on Bookmap and in the room how we traded long in the dip for about 7 or 8 points from 276.50 to 284. The same process over here. What we don't know is for how much this will push. But this is essentially how perfect is using order flow and using the chart, the strategy we teach. I had a question over here, Bruce, of a trader asking me, what's the difference between this and just looking at tape? And I'm going to reiterate this another time. Essentially, when we're looking over here at Bookmap, everything is, one, faster, easier, and you see all the tape at a glance and more. imagine that you're trading right now. We can do this. We have over here, let's say 4 charts, right? So we have Tesla, we have Meta, we have, let's say, a small cap, and we have NQ. Okay, so four charts over here. So you can look at the tape in Tesla, and that's fine. Of course, you won't see the liquidity $2 away from the actual price. Over here you have what we said, Meta. Over here we have a small cap. Over here we have NQ. I mean, you have to be a computer being able to look at the tape of 4 products at the same time, remembering what we had before with Bookmap. At a glance, you see those levels and more. So I can see this morning that when we are longing over here, we had sellers over here placed. So this was a level that was already from the open. I had sellers over here, and then sellers over here. The first was a breakout. The second was a breakout. The third one was a rejection. And essentially from there, from this 283 over here, we came down 3 points, 3 points and a half to 275.50. Soon we'll see the chart. So what it tells me, simple trendline break, lower highs, and this over here was 282. From this 282, we went 279.50. Just applying a simple strategy of what? Trendline break and rejection. This you cannot do with the tape. Okay, now don't get me wrong. I think that the formation of a trader goes into many directions, so you have to know everything, but then specialize. In this case, we're looking over here how to use the levels and how to use Bookmap as a main key guide for entering the trades. All right, let's dip over here into our charts.
Yeah, I'd just like to review just a quickly here, Joseph, or recap on that, because that curling. Basically, if you could go back to that chart for just a second.
Oh, okay, so sorry, the chart on Bookmap or the chart on the execution?
What you were just showing, your setup there.
Okay,
yeah,
we can put up this.
Yeah, so there's kind of a back and forth in YouTube right now. Number one is that where you have that arrow there, and then to the right of it just a little bit, there's those green dots there. That is a microcosm. That's in fact, if you look at that, I can even see like a mini reverse head and shoulders in there. Right?
Yep, exactly.
So this is an order flow event. Or pattern. This is the behavior that makes up this pattern. Trader Carlson continues to ask about this, and we continue to go over it again and again. These patterns are made up of the behavior of others. This is what you should be studying. Right now, Joseph has one here. That is showing a curling, and I use, Joseph, your curling word a lot, or term, because it very nicely kind of describes. It hit into high liquidity on the way back down. You're already bullish, right, because of the bigger picture. It hit into high liquidity on the bid. It starts to curl around and you found buyers. Great. Now you're looking for that structure to break. And there it broke again, and there it broke again. Those 2 lines that you just drew. Now there's a microcosm here, or a microstructure for that little head and shoulders, right? And then that break just above 280. That is basically the same pattern. It is just a bigger curl. Okay.
Exactly.
It's just a bigger curl. It means that he optimized this and got in at a really great price, but he doesn't know if the bigger curl is going to unfold. It is confirmed later, and then he can manage it any way he wants at that time, right? So the behavior is in here. You may see the pattern on your candlestick chart, but this is where you'll see the details that are the participants are telling you. They're showing you how they're participating. That's
exactly. It's all I would say, I always like to use this term, maybe because I come from Italian origin, so the gladiators, but it's always a big fight. like in the Colosseum over here between supply and demand. And it's just that. It's just like a big fight between supply and demand. And who wins is going to control the price action, is going to control the direction. So when we have monthly chart that is bullish, weekly chart that is bullish, daily chart that is bullish, lower time frames that are bullish, hourly, 5 minutes, 1 minute. And then you see morning pullbacks. Often, not always, but often, these morning pullbacks will be perfect levels, dips, opportunities to buy for a long side. So rather than I see traders that in the market, and Tesla went from, in the last move, from 180 till 300, okay? 290. From 180 to 290. Look at Nvidia. Went from 200 to 400. Look at AMZN. Look at many others. Look at it, yes, and NQ. So don't try always to be counter trend. If the market, and I'm saying this because I don't want to lose money, because I lost before a lot of times fighting the trend. No, do simply trend following strategy in this case. The market is strong. ES and NQ this morning were strong, were bullish. They were actually pushing before Tesla. So it was only a matter of time that Tesla this morning pushed because ES and NQ were strong. And there's a nice comment this morning that I remember from a trader that's called Paul Lafontaine. And he said a few minutes before the open, because a trader was asking, what are you waiting for on Tesla? And he wrote over here, wait for ES and NQ to confirm the long on Tesla. So we have to see, of course, the market is strong, it's trend following. If today the market will simply start like dumping, let's say NQ down 100 points, ES down 30, 40 points, there's no point of longing Tesla unless, has a very big strength today, relative strength, news, maybe Cathie Wood's buying another percentage or whatever. But rather than that, stay with the market. Better odds. You stay with the volume in play this morning. Boom. Major, big trend following trade and low risk. That's the point. Low risk. All right, traders. I think we can move to the last 30 minutes of Tesla because there are a few things that we can look together. So I keep, you can see over here, my screen very, I will share generally more than only one stock. Generally, I share 2 stocks into future or 3 stocks in one future. But over here today, I'm focusing with you on Tesla because it's very, very volatile, okay? There was also a very nice play on Nvidia. And I see that we got it from the 425 to the 431. But this is actually the main play. Okay, so let's look at this together a little bit more. So if you look at just the structure over here, and I'm gonna do this. Look at the structure. So we can understand, first of all, this is bullish, right? But just zoom out a little bit. Try to zoom out and look what is forming. This is a nice wedge. Again, many times Tesla will form these wedges. So we're gonna do this and this. This is what it's doing. We have a low formed, a high, a higher low, lower high, higher low. And over here, we're getting a contraction of the volume, right? So look over here, traders. Contraction of the volume. See, the volume over here is pretty low. Remember, 2 o'clock today, we have data. Okay, so we're going to look for that 2 o'clock. And now I want to share the reason over here of the bear trap and over here of the demand. So this morning we had 2 bear trap setups. What is a bear trap? Let's try to, I explained this in the past, but you have a setup over here where you can see the price holding into support. And at a certain point, you have a breakdown, like this morning. See, open, breakdown. And then I always circle these. You have this. So this is actually wanted. Okay. We have over here what? We have sweeps. So essentially, stop loss from the longs are triggered. Shorts are generally invited on these breakdowns, and Bruce will confirm they're actually invited to short over here, because a lot of retail traders or traders who are looking for a breakdown to enter short, they will jump in. They will jump in into a massive over here support, and then they will get trapped. That's the reason why it's called bear trap over here. So bear trap, okay? We call bear trap over here. And then we start forming the higher lows, higher highs that we saw before. But we had an add-on over here. So we can see this level, right? This is a clear level of liquidity. Who are these? These are buyers, okay? They are placed at 280, whole round dollar number, right? You can see over here on the right, 280. They want to get filled. Probably these are longs that, no, or they're adding to a position long, or they're looking for 300, but actually they're longs. So they are all executed over here. So they're starting over here to get filled, 280. Then we can see that we form a new low into 279 and 50s. And again, what we do, we reclaim the level of 280. At this point, we start forming the same formation that we had over here. So another bear trap. And how we know this is going to be a bear trap? You have to wait for the reaction. So only once we reclaim over here the level of 280 and we start forming a higher low, we can now say for sure this was another bear trap. Okay? And that's the reason for me to not counter trend. So don't go against the main trend of the higher time frame, of the lower time frame, to try to take over here a short like this. Because the trend is still strong over here. We're still making higher lows, right? And we are in a bullish environment. So stay away from always looking for counter trend trades. This is my suggestion. You can see here we had a high liquidity area. So this is clear. So they're actually starting over here to buy. This level is at 280.60s. And then push where? To the supply into the 282. Again, you can see jumps from this level, 280, breaks the 280.50, 280.60, we get to the 282. And then again, we had a bounce from another demand area, which was the previous demand, 280. And again, 280. So recurring levels, okay, recurring levels. So now we're breaking over here this wedge. When I talk about the wedge, means essentially this. So we're breaking down this wedge. And what is the next target that hypothetically we can hold? This over here, 279. And then if we break more, 278. So from these levels, I can start looking for a possible bounce. Okay? Let's look also at the chart. Any question on this, traders?
No, not yet. I think we're kind of caught up on questions.
Okay. So let's pass from a 5-minute chart to a 1 minute, just to see better the structure. And this is the moment that this morning it opened. So we're talking about this 9:30. This is the dip where we start buying. So that V pattern, remember the V pattern that we were looking before, it was over here. Okay, so this dip and this push. And then it dipped again. Remember on the fake breakdown, right? We just saw the 280 fake breakdown, bear trap and push. And then over here, we saw finally this wedge breakdown. Now this is a pretty good breakdown. So we said over here, we're possibly going to 279 or 278. Ideally, 278 is the low of the day. We have a massive demand area over here, 278. We can spot over here. So let's see how I'm going to react at 279 and ideally 278 we're going to get that. Is this still too long? No, absolutely. Why? The breakdown is real. We see major sellers. Look over here, also traders at these dots over here, right? These red dots or salmon color, they represent the sellers. So if you have over here to consider who is in control, just looking at something very simple, visual color, you see more salmon dots or more green dots? Because essentially traders ask you all me, Jay, I have the difficulties to understand if they're buying or selling. I tell you a very simple way to do it. What is the dominant color over here? Green, where we have only 2 dots and 3 dots, or the salmon, where we see multiple big dots over here. So sellers are in control, right? At this point, sellers are in control. Then you can look at the candles over here on our right, so on the chart, and you can see there are like bearish candle in the 1 minute. Now it's forming also a hammer. Remember what we spoke about before the hammer? We're bouncing, but it's still not a good level where I would buy over here. So we need a little bit to wait and see if we can get a or reclaim, in this case of the 280.50. So I will look for this reclaim over here, this level, or for that support. So this level over here, reclaim, or the support over here to do 78, which is the low of the day. Okay, this traders is our Tesla of the day. So some bounce play. We're not anymore in a long position since this zone over here. Okay, so we got this part of the move. We're waiting right now. So, or this here, or a reclaim, and this here. So trading the buy or cap pattern over here, reclaim. So I'm looking over here for the buy or a JLC. These are terms that we use. Moving from 278 and 80 up to 280. Still not enough over here. As I said, we need to reclaim the 280.50. So sideways for us at the moment. I'm also going to upload Bruce Nvidia and going over a few things on Nvidia this morning. So we're going to upload this. Nvidia Trader is one of the best stocks that is out there to trade in sense of high liquidity, wide range days, and also I would say good options. Okay, and I really like Nvidia, how it plays, the structure and everything. This is this morning Nvidia. So nice juicy run from the 421 up to the 431, 432. And now we see that is breaking this trend line. And once we start breaking this trend line, we start forming over here a first level of clear supply in the 430.50. So look over here, higher lows, higher highs, lower highs over here, breaking down is forming lower lows and lower highs. Clear area of liquidity after the trend line. This is a key level that I'm watching right now. So that means for now, bearish, so possible pullback. IMPL, we're shorting this morning. It's a small cap. And this small cap, we had a high forecast failure for the day. So we're going to do this, remove indicators. Okay. So this is one of those small caps that I run the forecast with me in forecast that I know exactly from a forecast system how much percentage we have this to close right on the day. 930 is over here. So this is the level of 930. This morning we pushed we had this major level of resistance 180, which was the guide. And you can see here, instead on Bookmap, where was the major level of liquidity, stack at 175. We actually got this 175 over here. Okay, so this level over here, right? And once it got into this level, I will zoom in now, it simply started to fail. So for now, we're still looking for this to unwind, 140 and ideally 120. This is one of the favorite setup that we trade since many years. Since when we started small caps, 2017, 2018, and we're trading this call gap and crap. So the first attempt this morning, we had over here 271 and over here. So we shorted 2 times, came over here 10 cents in the money, came over here 7-8 cents in the money, then stop over here, break even, stop over here, break even. And then the last one over here, this push in major rejection from the 175. Once we fill the 170, once we fill the 170 over here. So again, what is the bull trap, right? Because over here, longs are trapped above the resistance. And this is a particular pattern that I see often in the small caps. They tend to trap breakouts, traders. The level of breakout was this over here, right? You see the 170 breakout. And once we break above, now over here we have breakout traders. They're longing over here, so they're longing. But once we start going back below the support, reason to short, putting the stop, volume was low, was not very high volume. Major trap over here and rejection. Trap because where's the bull trap? Rejection from the heat map. We started seeing sellers. You see over here those salmon dots, major seller, and unwind. Seems like not a lot. I mean, you're trading Tesla, you're looking for 3, 4, 5 points. Over here, this is 20 cents for a $150, $170 stock. So that's a pretty good percentage for a fail. Something like this was very liquid this morning. You can even put size. And good dip in the 170. Now in the last minutes, it started for me over here, a little bit of bounce, but there's still low volume, low liquidity. I'm looking into this stock. So I'm looking to hold over here, putting the risk in this case at this 172. So why not using the profits over here for this morning fail? And 150s was the main target. Even if you're looking at 140 is the main one. Why not risk over here, this 172? So we have this level over here of resistance. We're risking that for the play. And this is until we're going to have low volume. CCCC, another small cap this morning. This was a little bit more trickier because today we had a high volume. The zone over here was a high volume. Now I'm going to there we go. I'm going to put over here the indicators, put volume. Okay, so we're going to put this in a separate field. Move over here to the panel below. And I don't really like these colors. So just like to make it gray or black. And there we go. This is a 1 minute chart. Okay. And look at the pre-market. There we go. CCC. Okay, over here I have only the last 30 minutes pre-market, but essentially you can see the volume started to push over here till 300K per minute at this peak 365. The key levels on the daily were over here 350 and 390 up here. So we didn't have, perfect point at 365 that I can tell you, oh, I'm short at 365 because that's a daily resistance. Now, what I was looking at was this. And this morning we shorted here. We alerted this point, we shorted. The risk was 370. Bookmap was the timing, so it worked perfect over here. This is what we saw, and I explained. I'll look over here. So level we shorted this, okay, 360s. This is the open. That risk was 370. The risk 370 because we were risking 10 cents in 10 cents. So we short over here 360 once this failed, all right? We see that at 366 we have some liquidity. It's not a big, huge resistance, but we had like sellers. More at 370, more at 374. So we had sellers over here. So 366, 370, 374. So these are three main level of liquidity. So three main sellers over here, level where sellers were placed, all right? And then once we saw the push over here, and this went vertical, look over here, from 350 to 362. It came up straight. So at this point, I see with you that we have only buyers, okay? The majority of these dots over here are green. So they're buying over here. And this is the front side of the move. So this bar here, they're buying, right? We'll try to zoom in. This bar over here, they're buying. This is this level, okay? And then it topped over here, 362. It topped over here, okay? So we start seeing over here a trend line break and then sellers jumping in. Now, you have to be careful when you short here, because if you short and then we start making again a higher lows and higher highs, you need to cut it, because this could be this kind of example. And often what I see traders is what they short breakdowns like here, and then this push to the upside. So remember, traders, if you short a breakdown, like we said before, be able and disciplined that if this pushes again, you need to cut. With Bookmap, I can short higher, knowing the setup, the pattern that I like to trade. And that's the reason, this is the point that we shorted. The short. We'll share also after on the chart, but this was already shared in room when we took it. We see that we have no buyers over here, right? They tried over here to reclaim and bounce from the 355. You can see this buyer, but then immediately we had sellers. And that's the reason why you can see this bar, the open bar, made a spike and right away slammed down. This bar went from 362 high till the 344, 345 low. So nice over here, 16 cents drop till this point. You see, till the main liquidity area, the main demand. And then from there, it simply faded. It bounced a little bit. You can see it bounced over here, rejected 344, rejected 350. This is the 350. Nice rejection, right? Again, you have to know what you're looking for. This is a gap and crap. So I know that at those levels, I will expect a fail. Few things for the traders that are still short with us on this. So we have a key level here. Then we have our low of the day after the open, right? And then we have this level over here. So we have three main levels this morning. Now over here, careful if we're gonna form this and start pushing, or the B scenario, so the one that we would like to see, because a lot of traders in the room are short, is looking for this and unwind and unwind. Okay, so we can call over here plan A, which is this one. So looking for the fail because we're short from this level, or plan B, this over here. Okay, traders. So this is the point over here. Looking at Bookmap, right now we have buyers and sellers, so I don't really have enough to say, okay, I only see sellers, I only see buyers. I was also looking over here at the times and sales that we had. What I'm looking is a continuation of the pattern. This is still a bearish pattern over here. So until we have this formation, we're going to look for holding the trade and the plan A. Okay.
Yeah, this is great, Joseph. Very clear. And love the different scenarios you have outlined here, or plans, and exactly what you're looking for.
Yeah, essentially every single time that I make a plan, I try to make a plan A, plan B, or even plan C, in order not to get caught in, I would say, a plan that I didn't previously consider it. It's very important for me to, evaluate the different possible market scenarios, so that once my, let's say, A plus setup plan, the one that I'm expecting the most, is not happening, okay, then I can still rely on the plan B or plan C. It's in order for me to not being caught off guard. And I always suggest, whenever I talk to a trader, wherever they are, to make always more than one plan. Don't always be, only with one plan, because that's being sometimes overbiased. Instead, I would say open your mind, evaluate different market scenarios, evaluate what can happen if we have a trend falling, what can happen if we have a stop, what can happen if we have a counter trend, what can happen if we have, for example, a entry which is good working, but then it reverses. So this will be the point. Having always different market scenarios in your mind, or at least you can write it down so you don't get confused. Another thing, Bruce, that I always suggest is to write down your plan, because one of the errors of traders that I've seen when they start like being mentored, or I talk to them, and I always tell them, write down the plan. And sometimes traders don't write down the plan, and then they say, oh, I followed that, oh, I followed this, or I didn't respect my plan. If we write it down, so really, even with the pen on a paper, maybe sometimes, not for the millennials, but for us, the old guard, that we are still used to studying the books, write down the paper and everything. And it's good. It imprints in your mind the plan. And you want to stick with that plan until, of course, that plan is valid, right? And sometimes what happens, oh, we know the plan. I know what I'm looking for. We say this to ourselves because maybe we're lazy, we don't have time. We think it's just like a loss of time writing down. Instead, no. If we write the plan down, it's more likely we're going to respect that, rather than, not writing it down and tell to our mind, okay, we know what the plan is, I'm going to follow that.
Yeah.
Don't you think, Bruce?
Oh, absolutely. I just want to let everybody know. I mean, Joseph has documented his plans and strategies so well. He has quantitative and qualitative data behind it, and he knows exactly what he's going to do. And if the market doesn't play, he's out. It's as simple as that. He cuts the trade. We were talking, Joseph, like I don't know, the last few weeks about trader psychology and trader management, and I keep on saying, look, if you want to learn this, go see Joseph, because you're one of the best with the trade management that I've ever come across. You just very unemotionally, you just cut the trade, and then you don't worry about it, and you look for the next one. And that's it. It's brilliant. It's really great. And therefore, if you don't worry about it, you don't give it that energy, and then you get all confused about, did I do it right? Did I do it wrong? Whatever. It's just now you're looking for the next event that is going to be high probability because you've done your homework. It's as simple as that. So One of the things that, well, a question I have for you here um, is, so what would you recommend for traders beginning? And so you've outlined two different scenarios here. And, you know, what I'm getting at is like how to learn to take a loss. So for example, if they take scenario A, which is a short here, and they know exactly, we won't have to go over the, the trade or the entry or whatever right now. But let's suppose everyone's doing it correctly. They're entering it correctly, based on your strategy, and then it goes against them. So, what do you recommend? Like, just where would you put your stop, or how would you manage it? And just run through that scenario, because yeah, it'd be really helpful. If someone's taking any trade, if it's not working or behaving the way that they think it should, what do you do?
So I don't want to be too long because I'm going to try to explain and answer this, I would say, sincerely and precise. But the point is, I will trail differently according to the setup that I'm trading and on the asset that I'm trading. Also, based on the statistics. I make an example. We had this morning 2 stocks in small caps, not much. Today was a slow day for small caps. IMPL, I run stats, okay, statistics. So really statistic data since 2021. And since 2021, my system, and this is something I show in the room, and I wrote it, it gave me 84% to close right on the day, which means below the open level. 84% since 2021, trust me, is a very big edge. This doesn't mean we'll simply fail, because it can still push and then fail, or it can be that 16% of those times the district extends. So always, read price action or the flow is what always Bruce tells you. Even if you have conviction, this could be let's say that the black swan that goes up 10 points today and you're going to have a big loss. So stats give you an edge, give you that conviction. Of course, I need order flow and the strategy. CCCC, I wrote instead less than 60% failure on day one for a series of reasons. Basically, it's a long forecast. It's a system that I put all my data and I know how many percent this will fail or not. Good. Based on this factor, that this is not for me a high forecast failure, so I don't have that huge amount of conviction that this will fail all the way down. Every single time that this morning we ran into a support, like this day, like this case over here, I'm very, very attentive that this any single moment could trap and squeeze. And that's my reason more, I would say, reinforced to have 2 scenarios. Our scenarios because we're short over here and we're looking for this. But I know, or actually we know because we've seen this a lot of times, that this could actually push and maybe squeeze over here. So what it means, if we're short at this point, maximum we're going to risk that break even today. That's my answer. Because this is one of those stocks, for the series of reason I said before, that I don't want to risk more than, the not the risk per day, but the entry level that we're in. On something like IMPL, where we have a high forecast failure, we can risk a little bit more because we have essentially the stats by our side. So what Bruce wanted to tell you traders is that whenever you have conviction, you can maybe, in my case, always, adopting a little risk per day with the broker and everything, you can risk maybe a little bit more. But on something that you're not really that convinced for a series of reason, be really strictly disciplined. If it doesn't work, to cut it. Okay? Be very, very strictly disciplined to cut it. The other thing that I found out, and every year is different, So don't think that 2023 is like 2021, is not like 2018 or 19. So every year has different months where we have more liquidity in small caps or less liquidity. Where we have more gappers that are running or more gaps that are fading. And it really changes really from, I would say, season to season or 3 months in 3 months. Now, in the last, I would say, 1 month and a half, okay, end of May until now, more than 70% of the stocks that we're trading are fading on day one. So we have essentially more faders than runners. But if we go back, for example, in April, and I'm talking about small caps, we had a lot of runners. If you remember, CXSI, SAI, Lucy, and all of these. Runners that will stay up for a day one, maximum until day three generally, and then fill again. But still they will give you a little bit of like problems, like remember TOP, okay, on day one. So we had a different market in April, starting of May, versus the market in small caps, okay, talking, that we have right now on month of July, okay? And how to know this? Essentially, you have to simply track, analyze the market from a different perspective. So there are tests that you can run in order to see this. And that really gives you so much more confidence when you're trading. So based on the market scenario that I have, and this really are pro tips that I'm giving you, you can simply run certain setups rather than others. If I know that the market of April, because I was looking runners day after day, I was not really looking to trade too many gap and craps. I was looking more to trade, for example, dip and bounces or underovers longs or breakouts and then buying the pullbacks in small cap land. Rather than now, I'm not really doing that almost at all, because 90% of the stock that I'm trading small caps in the last month in the room, it's only for shorting, okay? There's a reason, and this reason is simply data. And you cannot go against data because it's that, it's numbers, mathematical numbers. That's your certainty. So you can discuss, you can have all your thoughts. No, stats, data is what counts. All the thoughts are nonsense. And this is the market right now.
Oh, this is great, Joseph. So, like,
but this, sorry, Bruce, if I interrupt you. This is good because I've seen both sides, and I was there as a trader, not having that edge to tell me what I needed to trade with, size, with conviction. So when you don't have that, you try to do everything, study from everybody in order to create that edge that you can tell you, okay, now I simply have confidence in my tools, in my strategy. Therefore, I can look, to grow my account, to trade good, to make my paycheck, whatever that is. But only, with a lot of work, with a lot of data. Because a lot of traders, they ask me, they write me on Twitter or whatever, and they tell me, Jay, is this going to fail? How I have to do this? It's not, with one answer, you will clear all your doubts. With a lot of study, but there's a procedure in study that I personally created, and I believe all the good traders are doing, that gives you that confidence and that structure. Tell me, Bruce.
Yeah, I mean, that's it exactly. It's not one outcome here. It's not two. It's not five. It's hundreds, thousands, and you have to know that this is going to work in general, and then you take the trade. If it's not behaving, you cut the trade. So, for example, that setup, that short setup that you were covering. For people that want to learn, how to cut trades or manage trades, you may consider going over to Joseph and following up with him. This setup here, for example, you should practice and see. Okay, so this is the setup. This is where you would put your stop, and don't trade with money. If you have to trade and push buttons, because everyone wants to, either trade with extremely small size or don't trade at all. trade maybe in demo, and see, did it work or didn't it work, and then how to manage the trade. Like, oh, I got stopped out on this one. Okay, I took it again. I got stopped out on this one. Oh, I took it again. I got stopped out on this one. Now, you're going to have to do this at minimum 20 times to have some sort of data. Just some. This is the beginning of it.
Maybe 2,000 times.
Exactly. So,
Bruce, I want to add something. It's very, very important. And this is from a direct experience that I have with a trader. I think is just like explaining better what you're just saying right now. I was talking with a trader for last month. I'm talking only about June. And this trader trades futures, okay? He's not a professional trader yet. This is his goal. He's been doing good. But he told me, Jay, having this certain amount of percentage of risk, let's say on my broker, I closed the month, I believe, with 14 hours or 13, 14 hours, okay? And essentially, his problem is that on the red days, he loses too much. Then he started to run a test, okay? And he said, instead of making my red days, let's say I cut my red days at 1.8 average green days. Instead of cutting like that, let's cut it like 1 or 1.2 average green day. So one red day essentially is going to be no bigger than an average green day. His performance, okay, on the back test, right, on his tracking, went from 14R above 20. So this is to tell you, trader, that of course you have to, now don't do this. First, study your system, back test it, improve it, see how you can improve it. But essentially it's actually this. So learn how to accept the losses, because many times we don't accept the loss and we dig a bigger hole. Maybe you did splendid work for 2 weeks, and this happened to me so many times. So yes, I lost as well, and that's the reason why I'm telling you this. And because I've seen that, and because I brought, I would say, improvements to my trading style, I can tell you what worked for me. Of course, you have to experiment and see on yourself, okay? But in this case, was accepting more, or is accepting more, to manage the red days, so to have less, not really less red days, but to have smaller red days. That simply increased his return on his account, which is what we're looking for. We don't really care if he's making 70% green days or 50% green days. We're caring that he's making 15R or 25R. Of course, it's better 25R. And that's our goal in order to increase your account, okay? So for me is actually analyze your work and see how you can improve better, accepting to lose. Really accepting to lose. Trading is all about that. I want to say this, Bruce, and I'm practically very, very happy because I've been working with a coder, with a programmer in the last time, and we built a system that in the last 10 years had maximum 4% of drawdown average, okay? The win rate is around 50%. So it's not that, it's extremely 90, 80%. It's 50% more or less. Depends on the product. It's a lot of algorithms together. But the drawdown average in 10 years, maximum was 4%. 4, without optimization, all this. So that's incredible, right? So you don't really need a system that you have 90% win rate. You only need how to manage the red days, the red trades. That's how you're going to make money.
yeah.
Or at least this is my point.
Beautiful. I mean, that's it. I think, I see again and again lots of, from gauging, people's educating and talking to other people, their questions are revolving around what's happening right now. What are you looking at? What do you think this is going to do? And we're talking about one event here, and the mindset is kind of caught up in this one singular event. Instead, the bigger picture here is it's stretched over multiple events, hundreds of events, and then understanding, and like your trader being able to understand, okay, well, how about if you just cut the big red days? That's it.
Exactly. Exactly. It's not easy. I'm not saying this is easy, because maybe it's the hardest thing in trading. Maybe the hardest thing to trading.
Yeah, I agree. I mean, like, there's so many reasons why, like ego, revenge, missing out, all sorts of things that you repeat again and again as a trader, and don't understand. This is something with the clarity in your trade management I really respect. It's okay. This is what it should do. It's not doing that. It's going against me. I'm out. And then it probably turns around and goes the direction you thought it would be. It doesn't matter, you know?
Exactly. Exactly. And then you say, oh, I knew it. No, I knew it doesn't really work.
Yeah, exactly. You protected yourself. It should have worked then. That's your setup. You have all sorts of information and data that tells you that this works. So you believe in it, you know it works, you take the trade.
Exactly. Bruce, I want to share two trades. Of course, we don't have time to cover them today, but I say that it's it's what traders should do. I'm very proud, so I need to show them. 1 second. Adopting the same process with Bookmap. This is Meta this morning, so I think it worked pretty good. Very proud of this trader. He did a lot of work, and I believe he's going to become a professional. And then also this over here on Nvidia. And this was confluence of Bookmap with a very simple strategy. So not